This week in life insurance, we're talking about two bits of news that came out recently about the industry that are related in an interesting way. So today we saw the LIMRA first quarter numbers come out, and like the trend has been for the last couple of years, we saw overall premium growth in the year-over-year numbers for the first quarter, and this time we actually saw the number of policies grow as well by 1%, which is, in theory, really great news for the industry. The other bit of news maybe tempers that a little bit. So we had a report come out that said that there's about $1.3 trillion of business from the life insurance industry that's been ceded to reinsurers, and something like $450 billion of that has been ceded to offshore reinsurers. Now, reinsurance is definitely a part of the business, a necessary part of the business, and a little bit of reinsurance is actually a good thing because it can kind of signal a vote of confidence in a carrier. However, when you start seeing this size of reinsurance and seeing this size of reinsurance offshore, it starts raising some questions about whether or not the underlying business that's being written by life insurance carriers is actually profitable. And given that we've kind of seen the market continue to kind of contract and there'll be less and less carriers in the marketplace, there definitely seems to be something there about the kind of idea to sell as much premium as possible, but not necessarily sell premium that's going to be profitable for the carrier. And this might be a long-term problem for the industry. Something to definitely keep an eye on. That's all for this week. We'll talk to you soon.